Hey guys, I'm Phil Town. You might be wondering if natural disasters or crises impact investments. What do you think? Well, keep watching to find out. I've been hearing, about storms getting bigger and having weather crises, having climate crises, and crises in general, right? Problems in general that pop up. We have war, famine, pestilence. The four horsemen of the apocalypse have been around for thousands of years. They're going to be around in the future. And so we have to think a little bit about how do we set ourselves up to best deal with crisis, right? Now, obviously there's the personal things you can do, which I'm not going to get into here, but to basically have yourself insured to a degree where a big problem with weather or something isn't going to be a disaster for you financially. But I want to think about it from another point of view. I want you to think about crises as an opportunity for you. And if you're starting to think that way, then you're starting to think like a Warren Buffett, Charlie Munger, Ben Graham, Rule 1 style investor. You're starting to think like I do. You're starting to think, when this thing happens, then you're going to have a problem that creates fear. And that fear is going to come from some area of the country. Something's happening there that's really causing people financial issues and financial difficulties. Now, what comes from that can either be a very long-term problem, in which case, we have to help them the best we can, but we certainly wouldn't want to invest in something that's a long-term problem. I'm thinking particularly of something like that just happened in the news, like Sanibel Island gets flattened. We may not want to put money into Sanibel Island because of the risk involved that it'll happen again. Or it can be a relatively short-term thing, like what's happened to Fort Myers. Huge disaster in Fort Myers, a lot of people suffering, loss of their homes. But what's going to happen is they're going to rebuild that place. And that's going to be a terrific opportunity for a bunch of companies that are in fact public companies. Now, I'm not saying you should just go out and invest in companies that are going to profit from rebuilding after a disaster. What I'm saying is that disasters, problems, issues that come up, things that we call events, inevitably produce fear, which inevitably produces a company that's on sale. And the key is to know enough about that company to be comfortable buying it. I'll give you a really good example. You remember that well that broke out in the Gulf of Mexico? It was a BP well. Halliburton was doing the mud on it, the drilling mud that they were doing. And I can't remember who owned the drilling rig itself, but 3 companies were involved in that train wreck of a disaster where this thing was spewing oil into the Gulf for weeks. And all of those companies went on sale. Okay, well, there's risk investing in those companies because they're dangerous. I mean, they may have created some kind of problem and they might get sued and the federal government might take them down. A lot of things could happen. Here's what you don't know. All of the companies that were drilling in the Gulf, all of them went on sale, all at once, because that's how Wall Street works. They just paint the world with a big broad brush. It wasn't just BP and Halliburton, it was everybody. Everybody went on sale. Even companies that had nothing to do with it went on sale. And all you had to do is recognize the difference between a company that's in trouble, long-term difficulties, and a company that has nothing to do with it. It's just the industry is getting sold off by Wall Street. And walk in and pick it up. And if you understand that industry, making that call is easy. Now, if you don't understand the oil and gas industry, that's a hard call. We don't try to do things that are too hard. What we try to do is wait until a problem comes along, the solution of which we can see is just like jumping over a 6-inch bar. It's no big deal at all. We don't try to jump over 6-footers. We just wait till something comes along that's so simple that we know this thing's going to be resolved in a short period of time. And that's the bar we jump over. So, opportunities come from crisis, but you have to be selective about buying into the opportunities where you really understand the business and you know it's a short-term problem that will be solved soon. And when you do that, you will get rich. Well, that's it for this week's video. If you're new here or if you found this helpful, just subscribe to our channel for more education like this on a weekly basis.